All right, what is up, traders? What's up, tycoons? Super excited for today's video. Going to break down Horizon Technology, ticker symbol HRZN. Now, this one has a lot of people's attention due to the nice dividend that it pays out, about 10.33% annually, with a 33 cents quarterly dividend amount at 12.78 a share. That's a pretty nice dividend. So what we're going to do is we're actually going to hop over to TradingView real quick and break it down, go over the key levels, and give you guys a detailed technical analysis. Now, remember, none of this video is financial advice. Rather, this is just data on the chart of a live auction market. And I'm going to break it down so that you guys can help understand price action and some of the different signals that you can use to really help understand the price action, such as the major Fibonacci retracement levels, the MACD, okay, and also some of these gaps up that we have to fill. These are three things that you can use to really help give yourself an edge in the market and really help to understand some of the price action and why things may be going up or why things may be going down. Make sure to smash the like button, subscribe to the channel if you guys are new, and we're going to jump straight into it. So, we did hit our first bullish price target here of 1291 recently off of a three-wave move. So, if you notice here, I have an ABC drawn up, and this is a very nice, very clean structure formed right here, okay? So if you take a look, we have those three levels that I was mentioning to you guys, the 38.2, the 50%, and the 61.8% retracement levels. The reason you use these is these are the three most common and well-respected retracement levels because nothing moves in a straight line up or a straight line down. Rather, you get a move up retracement, continuation of the trend, or you get a move up retracement, a little consolidation, and then you break through those retracement levels. That's how you can spot a potential reversal. So right now, our major retracement levels are going to be 12.40, 12.23, and 12.06. We are bearish below there, okay? Meaning that, if we come up, consolidate through these levels, and then break through, most likely we're going to see some type of reversal and retest some of our previous lows around 11.50 and potentially even the $10.60 to 70 range. So we need to be very mindful of those levels. Now, a break below those levels would also coincide with this rising wedge pattern that we have right here. Now, just because we have a rising wedge doesn't mean it has to play out. It's a pattern in formation and hasn't given any confirmation yet. We haven't broken below the trend line here. And if we do break below, we'd look to see if we get a retest and then a continuation push lower. All right, if we get a break below and bounce off of our 61.8% retracement level, okay, that could be a look below and fail, which would be indicative of sellers having the opportunity to push price lower, right, and really take things back downwards, but rather failing and buyers demonstrating that they have control even when sellers were presented the opportunity and ultimately pushed the price up higher. Now, if you take a look, okay, this is a great example of how to use those levels, right? If we look here, we can see off of our A and B wave right here, we had a strong move to the upside. That was our A wave. And your B wave pullback B wave pullback is going to be within these three levels, right? And so you can see we came up, we retraced to the 50% retracement level, and then we hit our targets up here for the C wave, which is going to be the 786 to 1.0 extension for your wave C. Now, there is a possibility that this could turn into a 5-wave structure. All right. So that's what we have here. If this does turn into a 5-wave structure, a 5-wave bullish structure, we could come up and hit some of our bullish price targets at 1378 and 1440. Now, of course, there's lots of work to be done to make it that high, but I really just wanted to go over, the different bullish scenarios that we could end up getting, as well as, alerting you guys to some of the bearish scenarios if we break below that 1206 level and we end up breaking this trend line and getting the rising wedge pattern to play out. Now, something else that we have in here is this gap. So notice how we have a huge gap from this candlestick all the way down to this candlestick. We started to fill that gap, right? So if we draw a box in here, we can see, okay, that we started to fill that gap, but what we did was we only filled half of the gap. We only filled half of that gap. A half gap fill is going to be very bearish. And obviously you can see that ended up playing out very well. So we came down, filled half of the gap, but sellers took control and really pushed this thing much, much lower in price after we got that half gap fill. But we did leave half of a gap to fill up here for us that tops out right around 1482. Now, the reason you pay attention to these is because gaps on the daily chart, they fill about 90% of the time historically. So the big question is really when they're going to fill, not if they're going to fill. Okay. It could take, weeks, it could take months, or it could take years, guys, there's really no way to predict it. If you take a look over here, you can see that we had a gap in between these two candles as well. And this gap filled relatively quickly, right? We gapped down all the way to here. And then very quickly, we ended up filling this gap. Notice how we didn't do a half gap fill. Okay, we came up to the upper region of that gap, we pulled back, and then we ended up filling the rest of that gap. So, like I said, it could take for the next bull market cycle, right? It could take for the next euphoric cycle in the market for us to come up and fill the top of the gap at 1482. But I love to chart these gaps. I love to set some alerts towards the bottom or towards the top of the gaps. So that way I can understand if price action is being drawn towards this gap, and if it wants to fill those gaps, then, I'll be alerted to potentially make a trade and see if I can trade the gap fill. All right, so that's why I have those on the screen. That's why we pay attention to those. Now, let's go ahead and look at our MACD because it's a very useful tool, especially on the daily chart, okay, for spotting possible entry and exit signals. Now, those signals are going to be this red line here crossing below the blue line is going to be an exit signal. So if you take a look at this point on the chart, here's our MACD exit signal. You see we consolidate a little, and then we get a large move to the downside, right? Over here, we end up actually getting an entry signal. Now, this is going to be the exact opposite where the red line crosses above the blue line. So we see the red line crosses above the blue line here, and we've made a nice push from $11 up to right around the $13 region, just shy of $13 at the moment. Now, when it comes to the relative strength index, we don't have any divergences necessarily to worry about. There's no bearish divergence on here. And we also don't have a bullish divergence giving us an indicator of some possible bullish activity. So right now, the RSI is above 50, okay, which is, indicating more towards bullishness rather than below 50. And we need to be cautious when it comes up to the 70 level. That's the technical definition of overbought. As you can see, once we were around this overbought region over here, we ended up getting a very strong pullback. And then, once we're oversold, which is below 30 on the RSI, we ended up getting a nice move to the upside. So as a general rule of thumb, you pretty much want to be cautious when something is overbought. And not really necessarily buy into those, as the probability of something pulling back is much higher. And generally, you want to potentially look at purchasing something or entering something when it's oversold, as the likelihood of it bouncing up is much higher as well. Now, just because something is oversold doesn't mean it can't go higher, and just because something is or overbought doesn't mean it can't go higher, and just because something is oversold doesn't mean it can't go lower. But these are just the general rules of the relative strength index and how to use them. We also covered the MACD, right? We took a look at this rising wedge, our Fibonacci retracement levels of support that we need to hold. We know we're bearish below those levels and could potentially get this pattern to play out. We gave our bullish price targets to the upside. 1291, 1329 are the major resistance levels. And if we end up getting some type of a 5-wave structure, we could end up hitting 1378 or 1440. So hopefully you learned something new in this video. If you did, smash that like button, subscribe to the channel. I do these viewer requests every week, so all you've got to do to see your stock in the next video is comment down below, and I'll make a video on it as soon as I can.